episode show, and we've got like an in-office guest today. I'm super excited. This is the first time we're not doing it through a computer screen, so it should be fun. Sebastian Rein is here, and he actually works out of the Los Angeles office, so we figured it'd be fun to kind of do this in real time. And he's he's a real estate developer here in Los Angeles, huge advocate for co-living, and I have to share the story how we met. Our desks, so again, we work out of Playa Vista that we work here, and our backs were literally to each other for like 3 months. You know, his desk was behind mine, and finally we started chatting, and he asked what I did, and I asked what he did, and I told him co-living, and I got ready to explain what co-living was, and he was like, no, what do you mean co-living? I'm like, well, he goes, you're kidding me, right? And I'm like, yeah, I can explain it. He goes, no, I know exactly what it is. And you were literally like doing pro forma for a property in downtown LA. Yeah, so you want to talk about that a little bit? And
neck deep in it, yeah.
Yeah.
So my background comes from multifamily, value-add multifamily. I did a ton of that before the Great Recession, and then got into ground-up single family. And as I was kind of developing a single family portfolio, I started entitling a piece of land on Melrose for about 44 units, and got to know a couple of guys from Common who have been developing a pretty big name in co-living, and was very interested in creating a co-living space for them at that multifamily project. And so started to educate myself on how these deals get done and what the metrics are, and it's very interesting. I think, I ended up selling that project before building it, which I think is one of the challenges that a lot of these guys are having right now, is actually being able to get spaces from inked contract to actually out of the ground, because construction costs have gone up so much and land is so expensive. A lot of guys like me are having an easier time just selling the land to the next guy as opposed to building it. But you can see from other projects that are getting done that it's compelling and it makes a lot of sense.
No, that's awesome. And yeah, I didn't know if you wanted to say, but yeah, he's like, I'm literally sending this over to Common right now as we speak. And they're a big player in the co-living space. And I'm like, oh my gosh, like what are the freaking odds, right? Like nobody was really in the co-living space, because that was what, like maybe 4 months ago?
That's right.
That we met, yeah. So which has been really cool, again, to find somebody, with that development, with that real estate background in Los Angeles. And understanding metrics. And so I want to go deep into that, because again, we have people from all over the world that watch this, and we interview co-living operators. We have talked to a couple developers. We've talked to investors. So just from the investment standpoint and the real estate side, like where do you see this going? What direction? What makes sense? I guess because I know you've worked with a couple of big players on negotiation on property.
I think it's still evolving. Even the deal that Common offered to me to begin with changed over the course of 6 months pretty dramatically. Just for example, when they first brought me the first term sheet, it was they wanted I think they wanted me to pay for all the furniture, and then they would pay it back to me over a period of time. And I said, well, why would I do that? First of all, what happens if you guys go out of business in 3 years? I'm stuck with all this furniture. And they said, well, you can sell it all. And I said, well, do you know what used furniture sells for? I'll be selling it for like 3 cents on the dollar. And they kind of went scratch their head and they're like, okay, we'll get back to you on that. And then within 2 or 3 months, it was like, okay, you're right. Everyone's kind of having the same response. We're going to pay for the furniture. So I think a lot of this, and that's just a very small example, but I mean, they had a few different other ideas where it was like, okay, look, we can either act as a property manager only, and we take a big piece, and off the top, much bigger, like 3 or 4 times what you would pay a typical property management company for a typical multifamily project, or we kind of do a project where we are going to guarantee your NOI, and then we have a split over and above that where we keep X, you keep Y. And to me, that actually makes more sense. So we both have an investment in upside, and I know that they're really looking to maximize as much as possible. I don't know on the single family side, I think for multifamily that still makes a lot of sense, and those deals are getting done. On the single family side, where you have one home and you've got maybe 4 or 5 apartments or 4 or 5 bedrooms, I haven't seen where you get enough of an uptick over what you would get for a conventional rental for it to make sense yet. So I'm still kind of waiting to see how these companies kind of tackle that. It's not compelling enough to me yet. I think on the multifamily side, much more sense where you have, for instance, we were going to rent those studios, I think for like $2,500, and they are probably going to rent it to, and Con would probably have rented it from us for like $3,000. So right there, there's a big uptick. Plus, we would have a percentage of whatever upside they could generate over and above that number. So yeah, and like they're just one player. I think there's a lot of guys who are in this now and are doing really exciting things. I mean, I know you and I read that article yesterday about these very large numbers getting done for companies that are building very large projects in Asia. That they're combining micro units with co-living space, and the metrics there make sense. You know, you're able to rent something, a larger apartment maybe for $4 a foot, much smaller, it's like $8, $9, $10 a foot. So why don't you do that?
So you're maximizing the space. Because for the uptick, are you guys looking for, like, let's take the house, like a house for instance. You're looking for like a 20% spread between, you know, what you're out on it, including furniture and everything, and then what they're going to come in and pay per month?
Well, for this, I mean, my expectation is that, first of all, that I'm not sure if you were suggesting that I would pay for the furniture. My expectation is that the operator is going to buy and bring in the furniture, right?
Yeah, typically.
Yeah, typically. Okay. So, you know, I guess 20%, there's no real number that I'm like, hey, it's got to be X, it's got to be 20%, or I don't want to look at the deal. But I feel like there's got to be a compensation for the fact that they're going to be operating a business there, it's not a home, and they're really not a credit tenant. So it's not like I'm renting it, you know, to Kmart. You know, that's a bad example. That's not, you know, but it's not like I'm renting it to a AAA credit tenant, right? These guys are all startups, and so they're representing, hey, I'm going to give you a 3 or a 5 year lease. There's not a lot of value to me there yet for that, because these guys can all fold shop tomorrow. Whereas with a single family renter, they have a lot more skin in the game. Their family's there. They whatever, you know, they don't want to have an NOD on there, or they don't want to have a foreclosure. They don't want to have an eviction on their record. Those things don't really occur when you have a commercial tenant like this. So I feel like there's got to be some compensation for that, plus the fact that they're also going to be running a business there.
Yeah, and so do you worry a little bit about the additional liability, about the additional wear and tear when you're thinking about this stuff versus renting a co-living operation versus a family?
I think no, because I think that's got to be on their side of the risk, right? Any additional liability has to be on their side. They have to have proper insurance, and that's got to be negotiated up front. But it shouldn't be on my side then.
Okay, so it's not like you don't prefer one over the other. It just, if it was apples to apples.
I mean, look, clearly if you have a 6-bedroom home or a 5-bedroom home and you've got a family there that may only be a family of 4, as opposed to, you know, renting it out to bungalow or somebody like that where they're going to be having, you know, 6 individuals living there, there's going to be a lot more wear and tear. But they've got to take care of those issues when they turn the lease over, and to the extent that they're well capitalized. You're right. Yeah, maybe it is an issue. I really haven't thought that through that well. I guess to the extent that these guys really aren't capitalized enough, that can become a problem.
Yeah, but some of the players you're talking to have plenty of. They have a good amount of backing.
Today.
But that could change.
That can change. Yeah, there's going to be a shakeout. Like, right? I mean, do we think that there's going to be 100 of these companies, or are there going to be like 3 or 4 dominant ones, and the rest are going to probably go away? You know, I mean, it's more likely to me it's the latter rather than the former.
Yeah. And then have there been any structures, and I know we talked a tiny bit yesterday, briefly, like what's an ideal picture for you, you know, as the developer and as the person that holds the real estate?
I think some type of profit sharing, some type of joint venture, so that I can participate with these guys and not just be a landlord. But I mean, that may be specific to me. I mean, so there are probably some. I mean, I think also as these guys become more credit tenants, that changes. Where it's like, you know what, we now have an opportunity to have a credit tenant in residential, which you've never really had before. There's a different kind of deal that maybe that has a lot of value. Where, you know, in some ways it even pushes yields down even more than they are already in residential. So I think it's just as these guys continue to evolve and become more formidable financially, you know, they'll be able to dictate terms a little bit more. But I don't. And what I'm experiencing right now is they have an expectation of being able to dictate terms, but they don't actually have the financial background that suggests they should be able to.
Yeah. Or so they're kind of missing that track record. It's so new, right? Yeah. So it's kind of like the wild, wild west, you know.
It's a little bit of
everybody's
wild west,
and they've pivoted models. Some of them, you know, already. Some of the big players have kind of tweaked. Oh, well, this didn't work, so let's switch gears.
Which makes sense, and they're going to continue to do that. But I think also like the banks are still kind of trying to figure this out. Like, so when we were entitling this project on Melrose, I wanted to market it as a co-living thing, and the bankers were all kind of like, "What is that? You know, co-living, what?" And so just the idea of like getting a construction loan, which then gets taken out by a permanent loan once it's done and rented out, to introduce this concept of co-living threw the whole thing off. Everyone was just like, no. You have to market this as a conventional thing. Anything you do over and above that is gravy for you. So you couldn't, it really was not it didn't give me the ability to negotiate higher leverage for the loan or better rates for the loan, right? And that's what I was looking for. It didn't give me that ability. And then on the permanent financing, same issue. It was like, look, we'll underwrite this as if it's conventional multifamily, because we don't know if this thing is really going to work out or not. Everyone's talking about it. It sounds like a great idea, but we're not built for that. It's not in the box, not yet. And so I think as that evolves and changes, then maybe it becomes even more attractive, and you get to this place where people are like, hey, look, for multifamily ground up finance, ground up construction, you know, we max out at 75% leverage, but if you're doing co-living, it's 95% because we're so confident in this business model, but we're nowhere near that yet, right?
And when you were shopping around, what month was that roughly? How long ago was that when you were talking to banks for the Melrose property?
I don't know. I sold the thing in June, so you know we're talking about the first 6 months of this year.
Okay, got it. So yeah, it was definitely still a term that people didn't know what the heck it meant, and I think that's changing. Do you see that? I mean, I know you just recently spoke on that panel for multi-unit.
So
for co-living.
That's right. So it was co-living and also vacation rentals. You know, which they call just Airbnb. It's another thing. It's like these things don't even have like real terms yet. You know,
it's like a verb. Airbnb.
Yeah, exactly. Right. And so one guy was Bank of California, I think, and you know he was talking about they have all these programs specifically for co-living as well as vacation rentals. And so after the panel, I tried to dig in a little bit with him on a couple of projects. And just the leverage really isn't there. You know, it's the same kind of story. It's like, no, we do it, but we underwrite it as if it's conventional multifamily. So I'm like, okay, so you don't do it. You really just do multifamily, but you're not turned off by the idea that there is going to be this alternative rental model there. He's like, yeah, right, that's it. I'm like, okay.
So it's the same thing. So you think they're just packaging it up with throwing the word co-living, and it's the same terms, and there's not really.
I think that there's just not enough track record yet to allow them to push their underwriting guidelines.
Okay.
You know, and so once there is, and you have some really larger players that have been like done full circle on a few of these. I mean, I think, look, all of the news is very bullish, and so it's indicating in the right direction. So maybe a year from now we'll be having a very different conversation, but I haven't seen it yet.
Yeah, we're getting there. It's taking time, but we'll see. And then, so definitely, for your firm, like, are you going to have are you just kind of dipping your toes into co-living? Are you going to have a division? Like, how far in, alongside your other portfolio projects?
So, I think it's just very tricky because of where we are in the market and where we are in the cycle right now. So, I'm trying to raise money more than deploy money at the moment because I feel it's so difficult to buy something by value. That being said, so like just last night I brought what's the name of the company?
Outside.
Yeah, Outside, exactly. Over to the project on Baxter, which is a single family home. It's an R2 site, so you've got a main house in the rear, which is 3,500 square feet, and then a guest house in the front, where that's another 1,000 square feet. And you never actually have come out to see it.
I haven't seen that
right.
already. No, so my friends did.
Right, and so it's 5 bedrooms in the back and 1 bedroom in the front. And he wants it, but what I told him, I said, look, for an R2 site, what I could have done had I met you a couple of years ago, I actually could have built on just the 6,000 square foot lot. I could have built 18,000 square feet.
Oh.
Yeah, because it's not R1. Like R1, you're really capped. R2, it's commercial site. You have a 3-to-1 FAR. So someone like you could have we could make a deal where it's like, look, let me just buy all the R2 sites here, and we come up with a program where instead of building 4,500 square feet, I build 12,000 square feet, and I give you a 20-bedroom home. It's going to be somewhat monolithic, and that's the challenge. How do you design it so it doesn't just look like someone just tried to fit as many bedrooms into a tiny lot as possible? But your restriction on parking is basically the same as it is on single family, right? You really only need two covered parking spaces. I think 4. You need four covered parking spaces for an R2 lot. So you have a situation where you could build 12,000 square feet and have 20 bedrooms and have 4 spaces, and you're within code. So would I do that? Yes, that I would do. I think that actually makes a lot of sense. Finding land right now to entitle to do something for common or somebody like that, I just think the construction costs have gone. Look, I bought that piece of land I think in 2015, and between 2015 when I started underwriting, I thought I could build ground up new construction multifamily for around 200, 220 a foot. And everyone who I showed that to said, that makes sense, we buy into that. By the time I actually got the designs done and bid, it was over 400 a foot.
Oof.
Yeah.
It's a gorgeous house though.
No, I'm talking about the multifamily, not single family.
Okay.
Single family.
Not the one you bought. Okay.
Yeah, so obviously, that just didn't make sense anymore. And that was part of what drove me to the idea of just selling it. And we ended up selling it to a low-income developer who took my plans, threw them right in the trash.
Oh, shoot.
Yeah, all that time and energy and money was for zero, right? So they just was like, that's great, it looks beautiful, we're never building this, right? So I think that's the challenge, right? Either construction costs have to come down, or we need a correction, or we need to be able to rent, things for a lot more than we can today. Something in the equation's got to shift because the margins are too tight, at least for me.
Yeah, and you're right, and it's right now it's hard to find rentals, and so a lot of the property owners, they have the advantage where it's like, okay, people need, especially in Los Angeles, everybody wants to move here, and so it's like, okay, well, if I can rent it for top dollar anyways, do I, does it make sense on an existing property?
Yeah.
But you're right, building, a piece of land that you already have 20 bedrooms and one, infrastructure.
And to do that programmatically, I think that does make a lot of sense, especially if I have someone who's like, look, I will rent all of these sight unseen, based on this model.
Yeah.
If you build it, I will rent it for X. And then maybe now you've got something a little bit different where he's not really a credit tenant quite yet, but you do have signed leases for this stuff. I think the construction becomes a little bit easier for that reason. You probably get, maybe not a hard money lender, maybe you get a bank to buy off on this and help you do a bunch of these at a higher leverage than you would otherwise. Maybe that's a conversation that can be had. But so that I would do. But and so that I'm looking to do. But I think those deals are few and far between. I think right now you got a lot of big money jumping into this area, and I need my goal is to either latch on to people who are have a lot more. I think the time to be kind of like a small independent guy, it's become harder and harder to do that, and that's what I am. So I think it's either sit and wait or align myself with people who are larger and are able to do $100 million, billion-dollar deals, who can really pick up a big piece of land and do something big with it. Because I think the margins otherwise are really tough.
Yeah, no, that makes sense. So it's like partnering with who's going to be that operator that's managing everything, as you're finding, and helping you, and has the money behind them to raise.
Yeah. Small deals, you can be a self-performer. If you can self-perform on very small deals, I think they're like on these kind of R2 deals I'm talking about, or 10 units and less, 10 units and fewer, you can probably be a self-performer, and build on your own, and I would do that. But everything like kind of in between, like 5 million to 100 million, has become so difficult because the larger guys who are going to actually bid those deals are too expensive now unless you've got a very, very large project. The construction costs are just out of whack. But once you go larger, they get more economies of scale. They can really be more competitive. So you're sort of in this in between space of like 5 million to 100 million, which seems like a pretty wide area. It's very challenging. And so you can either be really small or be really big. What's sort of in between has become very difficult.
Cool. And how many years have you been doing
20 years.
20 years in Los Angeles the whole time? Cool. Yeah, you know the landscape. So you always, you bring these amazing properties to me first, which I'm always so grateful for Kndrd quarters, and I'm like, I can't do it. I'm doing this software unless I can clone myself and my team.
I know.
They're amazing
You're a
homes.
software
They're
developer now.
amazing projects.
Yeah.
I mean, we still have. I mean, I love Kndrd quarters, but yeah, I'm like, I had to pick one way to go, but luckily I know a lot of people in the industry, so I'm constantly like connecting Sebastian, like, okay, here's outside, here's these guys, see if they want to make a
great
deal.
connector.
Oh, well, thank you. I try as long as co-living in general. I just want co-living in general to take off, and again, I think we're getting there, and so that's my final question for you. Like, where do you see this industry like in the future going?
Yeah. So it's like in 1998 when people were like, internet's a fad.
Oh yeah. I remember that.
Yeah, exactly.
The Facebook's a fad.
Right, it's just a fad. So right, I mean, I think it's a similar kind of conversation where we sort of open the door to something that's very unlikely to be turned away. I think it makes a lot of sense for a variety of reasons, and I think it's only going to become more established. I just think you're going to see, a whole bunch of things kind of get thrown out there, a whole bunch of different models, and a bunch of stuff won't really work for different reasons, and some things will, and those will become the dominant ones. Whether that means, you'll have 2 or 3 companies that really get it, or a bunch that are all doing very similar stuff. It's unclear. But I mean, I just think like right now it's very interesting. It's an interesting time because you have all these different models that are occurring right now, and they all seem to have interest for one reason or another, but we don't really know the economic value behind each one. So that's what's going to shake it out, right? So like, for instance, there's another project or this other company in LA. I think what's it called? The Hive? Not the Hive. They have like.
Is it Star City?
Not Star City, but it's like bunks. It's
PodShare.
PodShare.
Yeah.
That's super cool looking. And that seems to make a lot of sense economically. I mean, there it's like, oh my God.
$50 a night.
Yeah, but think about the square footage that you're renting for $50 a night.
When you have 3 bunks.
I mean, they're renting this stuff for like $80 a foot. I mean, it's crazy, right? It's like it's better than we work. Right. So that makes a lot of sense. But is that viable long term? Do people really want that? Or I mean, it's like maybe that is. Maybe that's another one. It's just I don't know. I don't know yet. Is Common really the way it's going to be, or is it going to be something more like PodShare? We don't know yet.
No, you're right. They're so different, right?
Yeah.
They're such different models, and it's like, and it might be different avatars to customers, right?
Yeah.
That could afford $50. Maybe they're driving for Uber and they're living paycheck by paycheck, but they want to be in LA.
Right.
They'll pay, because I've actually met her. It's actually a cool model because they can pay per day even versus somebody paying for a month in advance with a security deposit. If they can't afford, $6,000 out the gate.
It's a great model. What are the limitations to growth, right? They gotta be able to find space that allows them to do that.
Yeah.
It's zoned properly and it's big enough to actually, and not too big, but it's big enough, right? They have this, because I spoke to her also, and she was like, well, we don't want to be too big and then kind of lose.
I think they're about 100 beds per location,
right?
Which is pretty decent.
It's pretty decent, but I don't think it's that many square feet. Like she doesn't want, like the deal on Olympic. She was like, no, I don't want that. It's too big. We don't want that, right? And I think that was like 20,000 square feet or something like that. Maybe it was bigger, but even that, she's like, no. We want like 5,000 square feet. Yeah. That's good for us, right? And so she's got to find a bunch of those that are zoned in the right spot, and where she can actually do that. So I think that there's a limitation there. I don't know, like that big deal that we looked at online, where they built this huge thing in Hong Kong. Right, and they got $1 billion in funding behind them. I mean, but see, to me, what's interesting is they're talking about that deal as if it's a foregone conclusion that it's profitable. We don't know that, right? What we know is that they had 1,000 applications.
But we don't even know that. That's
this is what he's representing.
Yeah.
He's saying we had 1,000 applications.
We've heard that too before from different people.
So maybe that's not true. But let's say it is true. We don't know what the rents are. Like, what did it cost them to build it? Like, all that hasn't been fleshed out yet. Like, are they saying, hey, we're giving it away today because we need to get market share? Well, we've heard that before. That was like Pets.com. That doesn't work so well, right? And so there's got to be a real viable revenue stream here, and so I just don't know that we know that yet. So some of these guys may turn out to be superstars, and some of them may not.
No, and I love, this is such a great interview because it's like the real life nitty gritty. Let's get to the numbers. Let's not, because some people I think it's just excitement and it's fluff and it's like co-living. And then I see people from cryptocurrency jumping over into the industry and I'm like, oh no, like let's flush out. Like I think you nailed it when you said, like there's like 100 players that are coming in, but who are going to be those like top big?
Who's going to be Google and who's going to be pets.com?
Yeah, exactly. That's the best analogy. Flashback to the late 90s, right? The early 2000s. So no, that's really helpful. Again, I think if people listen in and they take this in, especially when they're trying to structure a deal, multi-units, what's that going to look like? Is that co-living? Because then there's that argument where it's like, well, if you're building, 300 units, everybody might just stay in their studio suite and they never use the common areas. So are they even co-living? They're just living independently.
Right. That's right. And I think that like that thing we saw in Hong Kong, like to me, we don't know that either. Is it co-living, or are they just calling it co-living, but they're really just micro units? Is there a common space? I don't know. I'd like to dig into that more. But yeah, exactly. Is there a distinction, and does anyone really care yet? Right? From a perspective of whether it makes money or not, I guess that's what people are really.
The money part. No, and you're right. And you don't want to be blinded by the excitement of like what's the bottom line. And when I have some closed door discussions with some of these co-living players, with the owners and the founders, they're upside down, and they don't know. They're trying to pivot their model because they're not making any money.
Is Common upside down? Can we talk
No,
about that?
no, I don't know. I haven't talked to Brad directly, so I don't know. I'm sure that they're fine. No, these are their players, but and it's like again, they're just everybody's jumping in, they're feeling it out. Like nobody knows. A lot of people they're not sure. Is this going to work? Is it not? Let's pivot, which is fine. I mean, nothing wrong with pivoting, but at least pivot to the point where you're going to make a profit, right? Like that's what it all boils down to. It's not a charity.
No.
So awesome, Sebastian. Well, good stuff. Any final thoughts or how people can reach you or the deals you're looking for? Are you just strictly Southern California, ideally, Los Angeles?
I am in Southern California, yeah. So aazcorp.com, ADDAZERO is the name of my company. But yeah, no, I'm LA downtown to the beach. I mean, that's where I've been.
That's your world.
That's
so
my world.
Yeah, if you guys need to talk to somebody, he's your guy, or I'll connect you guys. Sebastian knows, anybody that wants to develop co-living, I usually put them in touch with you so that I don't get tempted to take more property at this point. But thanks for coming on this show so much.
Thank you so much.
And then we'll have your contact info in the show notes.